Hello everyone and welcome to a new video for price prediction based on Elliott Wave analysis for Bitcoin. In the last previous video, and especially in the deep analysis that you can find at the end of this video, we have made a study here showing the parabolic cycles of a Bitcoin price, and we can see the several repetition of every cycle repeating the same lower low for every cycle, hitting the fib levels between the 0786 and the 0886, and which is very common also for the next cycle. And for this cycle we have already touched the lower low area for the cycle, so by all means that means we don't have to expect a very lower low in case we see lower prices in the future. And what we are looking for instead is a higher high as the same for every cycle, and we are expecting for this cycle to touch the 1.618 fib level at 123k. And for more information about this study, you can find the video linked at the end of this video for further information. Now I'm gonna move directly to the daily chart. For the daily chart, what we are looking at is also a impulse, finished impulse in green, and inside this impulse we can see an impulse in orange, 1, 2, 3, 4, and 5. Finishing the wave 3 of the green as 1, 2, 3, 4, and 5. And after that we are looking here for a flat ABC and then another rejection and also another leg for this correction, which would make it already 3 corrective waves towards the downside, maybe finishing the wave 2 soon or later, right? To get more information about this, we are moving to the 4-hour chart, and we're gonna see here what is going on inside this corrective wave. What we are expecting is this corrective wave is a clear 3 waves correction, right? We have already spoke about the A, B, and C flat finishing exactly at the fib levels here, and we have seen the only rejection towards the upside over there. This is the only retracement that this corrective wave has seen ever. So by all means now the wave B could have finished exactly here. So what we are looking at is an A, B, and a C. And if we are aiming for a wave C or wave 2 already there, the fib level would be around the 58,400 for 1-to-1 fib level for a zigzag. In that case, we have to fill, of course, already this CME gap, which is existing already, and it has filled already the half of it. Now, the expectation of the most high possibility, of course, it is a possibility that we move down and fill the gap already and hit the target and move on with the wave 2. However, because we are already in a very strong support area right now, which is the 0.618 at 59,800 almost, and it has not been yet touched. So we have already started to see some rejection and some range here, and kind of a formation of a 1-2 and 1-2, and maybe a pullback towards the upside. In that case, if this happened, that means we are going to close, of course, the half of the gap, rejecting this support level, and it goes towards the upside again, having a much clearer wave B, then moving the wave B towards this side and closing, of course, an A, B, and a C flat, expanding flat, and after that looking again for another impulse towards the downside. 1, 2, 3, 4, 5, filling the other half of the gap, filling also the wave 2 requirements, the fib levels required for a wave 2, and then move on towards the upside. Of course, this scenario has been also explained very well in the psychology market video that you will see also in the latest video before this one in my list. So if you want to have more information about the psychology scenario reflected in the chart, you can see it in that video made before this one. So what is next? The most highest possibility then is to get a rejection and get a much more clearer wave B, and finishing this corrective wave as A, B, and a C. And that would be perfect because the correction would end exactly at the right time, as well as a fib level time for the wave 2. And yeah, regarding this is regarding Elliott Wave. Now I want to show you also one more bearish scenario is that it might happen, because this is here is our bullish scenario. After 3 corrective waves, we want to look forward towards the upside for a impulsive and explosive wave 3 towards the 100K. On the opposite side, if we look at a bearish scenario on the daily time frame, this bearish scenario reflects totally something else. So the thing is, if we have a bearish scenario, then we do not expect this is a wave 3 anymore, but rather this is a wave C, right? Then this means it's not an impulse anymore. This is just an A, B, and a C. After this, we are looking to a very big corrective wave, right? Which is A, B, and a C. And inside this ABC, we can see 3, 4, 5 wave corrective for A. We see here 3 waves corrective for B, which is perfect, and a 5 wave corrective for a C, which making this a very perfect zigzag pattern, right? 5, 3, 5. Now after this, we got another 5 waves towards the upside, which claiming in that case, if we are bearish, then we don't have to consider this as a 1, but as an A, right? If that is an A, then we are expecting, of course, a B towards the downside. And if we have a start of a 5, then of course B should be always 3 waves. So if we have A here and 1, 2, 3, this is your B down, then we are expecting 5 waves towards the upside, which is a zigzag, finishing the C, right? And in that way, we have finished our zigzag pattern, right? And in this case, after finishing this zigzag pattern here, right, we are expecting a move towards the downside, because after this, you're gonna have to consider this hole as A, and then B, and then C towards the downside, right? Towards the 40 or 50 case. So this is your most bearish scenario that it could happen. Now the worst case scenario as well, it could be like touching the 886 with your wave B here and having just a regular flap coming back almost to the highest high, right? This is your worst case scenario in a bearish scenario. One more bearish scenario, which is possible but very low possibility, is an expanding diagonal where we're gonna see lower prices for wave B, even going lower than the last low or the lower low, and creating a wave B, overshooting wave B, and then having a massive wave C, looking for higher highs, tricking the traders and investors that we are going for 100K and then moving down impulsively towards the downside. So this is a very low possibility. Why? Because we have 5 waves and not 3 waves. For an expanding diagonal, you need 3 waves by 3 and by 5. And in this case, this scenario is the lowest because we have 5 waves here, and the highest possibility is for a regular zigzag or a normal zigzag, right, towards the upside. So this is your bearish scenario, and that means in our bearish scenario we are still expecting a wave towards the upside. And yeah, for more indicators about what is going on, I'm gonna start here with the RSI indicator. So if we look at the RSI, what is going on the RSI? I'm gonna start on the weekly. Okay, on the weekly chart, we can see clearly that we have an overbought scenario here, right, on the indicator. So what we see as well is that this inclination of the RSI is massively represented here, right? However, this is your kind of divergence, right? But you cannot really rely on this, because when we take this divergence, actually it should be towards the upside, right? So this is your real divergence when you have a very bearish market, okay? But in that case, we don't see any really significant divergence here to say that we are going very bearish, right? And we can see on the RSI that the RSI signal has moved towards the midline and then rejected towards the upside and then coming back now to the midline. So of course we have to watch here what's going to happen, if it's going down or not. But I believe that it might reject this midline again and break this trend soon or later for our impulsive waves coming in the next wave 5, right? So this is of course a possibility, but for our wave here, we gonna need only to break towards here and to get our 5th wave. Even we don't need to pass the overbought, right? For the weekly. Therefore, I think this is a very good signal here, and that there is no really bearish divergence, right? Signaling a very strong trend towards the downside. This is regarding the RSI on the weekly, while on the daily, we can see also that, okay, yeah, we can see that this trend here, okay, this one is also the same, has almost the same inclination, right? It has almost the same inclination, and that means that the slow correction here is not exhausted or is not overwhelmed to get directly towards the overselling area, right? So that is also a good indication here. It's not that we can see that, okay, it's going down, then it means, okay, we're done here, all right? That's why I don't rely so much on indicator, because sometimes it can be very as not so clear, right? It can mislead you, all right? So if you look also at the MACD indicator, we see in the MACD indicator, okay, yeah, on the MACD indicator we can see exactly that the volume here of the sellers is growing, right? And it's still in very red color. However, the lines of the trend are still over the midpoint. Therefore, I think, because of course sometimes the MACD lag with the trend, right? Therefore, I think that this volume is gonna start gradually to turn up towards the upside. And therefore, I think that those two trend lines will have to curve again, even to stay a little bit above the midline and then move up again from down, right, towards the upside. So do not get tricked, of course, by the amount of the volume that is happening here, and also by the cross of the trend line that you can see here. It can be very false signal here, right? It can very easily turn and make another cross exactly in the middle and starting the big trend towards the upside, right? And especially after the two trend lines coming up from the downside, all right, we are expecting a higher wave towards the upside, as we saw here almost, right? So this is the idea here with the MACD. I think that's why I don't rely so much on these indicators. Elliott Wave is the most useful tool for me to expect for the market expectation, right? So one more thing I can show here is the Bollinger Bands, right? Let's see the Bollinger Bands. The Bollinger Bands here, yes, so we can see that on the daily, we can see that the daily candles has reached directly, like it went down directly towards the lower band, right? Rejecting the mid one and then coming back to the lower again, and even creating a candle outside the band, right? Which is a very strong signal that for a downtrend here. And again, this is what I talked about the other video, the psychology of market, yeah, because we were supposed to have 3 corrective waves. However, this wave was very strong and very tricky, and even the shape of it is very sharp and not clear, and that because a lot of fear and a lot of psychology is inside this trend. Okay, many people are insanely selling off Bitcoin because of some fear and some news in the public, right, saying that we are in a recession, in US recession, and so on. And I showed in the psychology market video that that Bitcoin has nothing at all to do with the US recession, and the same for the euro, the same for the JPY. So you can watch the video again about what's going on here. Yesterday it was, I think, much better explained about as well. I'm not gonna repeat it here because, of course, for the viewers that have already saw my other videos, to not repeat myself. So what's going on here inside the MACD is we are looking, yeah, to come back inside the area, right? As you can see here, a very strong trend get outside, creating a candle outside the Bollinger Band, and then going back massively towards the inside. So we are expecting almost the same scenario here to repeat itself, right? To go almost inside at least until the mid line of the Bollinger Band, and then we're gonna see what's gonna happen later on. But that explains exactly our scenario, our highest possible scenario, where we go back, hit this wave C for a flat, if you remember, and then go down towards the downside with a much clearer 3-wave structure for a wave 2, right? Hitting the wave 2, filling the gap, right, and move towards the upside. So that was it for Bitcoin price prediction and Elliott Wave analysis, and of course the other indicators. I hope that you like it. If you did, please press the like button and subscribe for the channel if you didn't yet. Thank you for watching. Have a nice Sunday and see you in the next video. Bye bye.